Hello, I'm Tim, founder of SPX Option Trader. And in today's video, we're going to be learning how to use the Daily Outlook and going over a real-life example of how to use this strategy, how to use it profitably and efficiently. Now, at SPX Option Trader, we are day trading options, seeking to profit from the intraday movement in the S&P 500. And we have several strategies that we use each day to do this, but they're all focused around the Daily Outlook. And in the Daily Outlook, we provide our market forecast of direction, forecasting either an up day or a down day. And based upon that information, we make our trading plan for the day. We use our proprietary algorithm to forecast which way the market will move and also to forecast key target levels to watch. And based upon that forecast, we either purchase a put or a call and seek then to make a profit on that position. Now, within a minute after the opening bell at 9:30 Eastern Time, we post our Daily Outlook with market forecast, an analysis, and trading information for the day. We're trading options on expiration day or 0 DTE options. These are highly volatile options and they're not for the faint of heart. But with the information we provide and the tools that we give our members, we have the edge to trade these options and to trade them efficiently. Now, we are always out of our positions by the end of the day. Normally in the Outlook, we're out of our position within the first hour of the day, sometimes within the first couple of minutes. We provide information for both SPX options and SPY options, and we trade both for the service. However, most traders will choose either one or the other to focus on, and we have articles on our website to help you choose which would be the best for your given situation. Now, in today's video, I'm going to be focusing on simply trading the SPX options, but it would apply to SPY options just the same. For training purposes, I'm using the on-demand feature of Thinkorswim, and I'm going to be recreating the alerts as they appeared on this day in real time. So please realize that the timestamps you may see in the window won't be accurate because what you're about to see is a recreation of the trading day. But that being said, the alerts you'll see, what is posted, the way the charts move, how we traded is all actually what happened on this day. And I'll show you how a member could have used the information provided in the Daily Outlook and use it to trade the market efficiently and profitably. And hopefully this will serve as a good example for you in your own trading. Okay, let's get to it then. Here's our sample workspace. It's loaded up and ready to go with our Daily Outlook screen and our Excel worksheet. Now, if you'd like to know more about how to set up your screen, please be sure and check out our video specifically on this topic. It's how to set up your trading platform for day trading options. And in that video, we discuss how to set up your screen, how to use this Excel worksheet. And if you've not yet watched that video, I highly recommend you stop now, go watch that video, and then come back and continue with this training on the Daily Outlook strategy. Members can download these sample grids for Thinkorswim and the Excel worksheet all on our website. Now, I'm going to be using one screen for ease of this video, but again, it's very difficult to trade with only one monitor, and I highly recommend using multiple monitors, 2 or 3, so you can spread out your work and see everything efficiently and quickly. So here we are at a computer screen. We're just before 9:30 a.m. on June 28th, 2024, and we're ready to go. Now, just a quick overview of what we see here. This is our 1-minute bar charts of the SPX and the SPY. We have our active trader down here that'll be ready to go as soon as we enter an option symbol in this screen. We have our web browser open to the Daily Outlook, waiting for the information to be posted from SPX Option Trader. And we have our Excel spreadsheet here ready to enter the information once we have actually entered the trade. So as we wait for the market to open, we have everything set, and it's simply a matter of waiting for the opening bell to ring, seeing the information posted in the Daily Outlook, and then things begin to move rather quickly for us. Generally speaking, once the market opens, our Daily Outlook will be posted within 30 seconds or so. We'll notice here that the market just opened, and so now we're simply waiting for our information to be posted on the Daily Outlook. You hear the ding, the alert that it's been posted, and there we see that it's been posted. Now we're going to pause the day and look at this in detail so you can see exactly the information that is provided for us here. Here we see the information that's posted in our Daily Outlook. First information here is the market forecast. And first we're going to see the SPX market forecast and then the SPY. So first is the SPX. We have a close of the day for the SPX should be above 54.90, and we see the daily target there. That's telling us that the forecast is for an up day, and the forecast is that it should close above that level. And then we see a first target high, a second target high, and a third target high. These three levels are all very important to watch as the trading day progresses. Then we have our SPX trading strategy, where we say we plan to buy to open, and we give the actual ticker symbol for the option. Then we spell it out: SPX weekly option, a call. The strike is 54.95. The expiration is 6/28/24, and the limit price of 15. That means that's the maximum price we are willing to pay. We have a goal of an 85% profit target, and initially using about a 60% stop. Now those levels will change as the day progresses, but those are our initial levels. Now, if you're just trading the SPX, you can stop right there and enter the information appropriately. If you're trading the SPY, we come down here and the same information is presented for the SPY. The close of the day should be above 547. That's our daily target. We give 3 target highs, and then the trading strategy for the SPY, the actual option contract, that is a call, the strike, the expiration price, and the limit price, as well as the profit target and the stop target. The next information that is presented is the possible support and resistance levels. And these levels come into play if the market is going against us. And so there are days where these are key levels to watch, but if the market goes in our way automatically from the open, then these aren't levels that are really that important to us. We still have the time paused here for a minute, and here's how we would proceed with the information that is posted in the Daily Outlook. The first thing we want to do is notice that the option we're trading is listed right here, and so we're going to double click that, and we're going to Control-C it to copy it. We're going to go up to our Excel worksheet up here and Control-V to paste it in, so that it will automatically give us the price information. Once we have the information in Excel, we come down to our active trader, and we're going to hit a period first, because when you copy and paste quickly, it often doesn't get that period, and then just Control-V and enter, and our information is now in our active trader as well. So we have our information up in our Excel spreadsheet now, and we also have it down in the active trader. The next thing we want to do is enter what our profit and stop targets are. Our profit target is 85%. Our stop target would be a -60, and you enter it as a -60. Those will not be calculated until we have an actual entry price. Now, the next thing that we want to do, now that we have our option ready to go and ready to enter, we want to come down and look at our daily target levels. This is for the SPY, this is for the SPX. And in the SPX, we're going to quickly enter in our target levels. We talk about this in the other video, but we have it set so we can just double click to enter a line, right click it, say edit properties, and we enter the appropriate amount. That's going to be 54.90 for our first one. It's going to be 55.04 for our second one. It's going to be 55.18 for the third one, and our final third target level, fourth level that we write in the chart, is 55.29. That's going to give all three levels in our chart. Then we're going to come down and do it in the SPY as well, because we're watching both as we trade. So we do the same thing here. We're going to enter in those levels, the daily target level of 547, 548.25, and so forth. Now, this can take a little bit of time if you're not familiar with how to do it, but once you get quick, you should be able to get these entered within about 30 seconds, and you're ready to go. Now, we're looking to buy to open on the SPX at a limit price of 15, so we don't want to go over 15. We're going to zoom in here so we can be watching our chart. Now we're ready to go for the day. Before we continue, we need to discuss our entry guidelines. Now, we have an article on our website discussing this, and if you're interested in more information, I encourage you to read that, but it's appropriate for us to discuss it here because the information provided every day on the SPX Daily Outlook just says note our trading guidelines. Now, first, we would never suggest that you enter immediately after our SPX Daily Outlook is posted. This provides the guidelines for entry, but we determine our precise entry by looking at a 1-minute chart. Now we're focused primarily on the SPX, but we also watch the SPY 1-minute chart because both work in tandem to help us pick the best entry price. When it comes to entry, we normally wait until 9:35 Eastern Standard Time. Now again, all the times I'm going to be referring to are Eastern Standard. And if the option is trading below our limit price, we will enter the trade. And over 50% of our trades are entered this way at 9:35. The first 5 minutes of the day are often very volatile as things settle out. And so most of the time we're waiting until that 9:35 to enter. But there are times where we enter before that. About 40% of the time we enter early. Now we enter our trade before 9:35, and that's what we mean when we say enter a trade early. If the market is moving very quickly in our forecast direction, or if it's approaching our limit price as shared in the daily outlook, we will often enter the trade early. Sometimes we delay entry, that is, we enter after 9:35. That happens less than 10% of the time if the SPX is heading in the opposite direction of our forecast. For example, we forecast an up day and the market is just moving down very quickly. We will delay our entry until the market turns. Okay, so let's look at a couple of examples so you can see how this plays out in a real-time chart situation. Okay, on this day, we had forecast a down day. The daily levels were at 54.65 on the SPX and 544.5 on the SPY. Now, we've pulled up a chart here. You can see that while the market initially went up, then it kind of went sideways on the SPX, while on the SPY, it was basically holding right near the daily level. On a day like this, we would be waiting until 9:35, and at 9:35, we would go ahead and enter our trade, which is what we did on this day. The market was moving basically sideways. 9:35, we go ahead and enter the trade. Again, this happens over 50% of the time. Now, an example of an early entry. This is 7:24. On this day, we forecast a down day. You can see we already have our target levels entered on the chart. This is the 930 bar. As the market was going sideways, we were waiting, but then at 9:33, it started to move down very quickly. It was below the daily target level, and we would forecast a down day. We're looking to enter a put. It took out the low of the bar here, the low of the day at 9:33 on the SPX. It also was doing the same on the SPY. So on this day, just at the close of that 9:33 bar is where we would have looked to enter our trade. And that's exactly what we did and made a nice profit on that day. So that's an example of when we're looking to enter a trade early when the market is quickly moving in our forecast direction. And again, this happens about 40% of the time. Okay, now let's look at a day where we entered the trade after 9:35, a late entry. And again, this happens less than 10% of the time, but it's still important when it happened. Now, this is on September 10th. You'll notice on this day, we forecasted an up day. We already have our lines drawn with the daily target level in both the SPX and the SPY chart. And we forecast an up day, and as the market opened, we were almost ready to enter the trade here at the 9:33 bar, but it did not take out the high, as would have indicated an early entry, as we just looked at. So we waited, and the market reversed on us and started to pull back. Now, when that happens, we did not enter here at 9:35 because the market was heading down, and so we were waiting. When we're looking at a reversal indicator in the morning, we're looking for it to change direction. If we forecast an up day and the market has moved down like it did here, we're waiting for a green bar, like this one, with a close that is above the open, and we're waiting for the next 1-minute bar to take out the high of that bar. And the opposite on a down day. We wait for a red bar and wait for the next bar to take out the low of the bar. There are exceptions to that, but that is our basic guideline for delayed entry when the market is going against us. So on this day, you'll notice the market is going against us. We are waiting for a green bar and then the next bar to take out the high. This was a possible entry, but the next bar was red and came back down, so we waited. This was a red bar. We waited. This was a green bar at 940, promising. At 941, it took out the high, so that is where we entered the trade on this day at 941. A late entry day because we are waiting for a reversal indicator. So to sum up, Basically, if the market is heading in our direction, we may enter the trade early. If the market is going against us, we wait for a reversal. If it's basically flat, we normally enter the trade at 9:35. Now, we post alerts on our website after we enter the trade or if we're waiting for a reversal setup. Now, starting out, you can certainly wait to enter any trade until you see us post the update on the website. It can take some time to learn how to read the charts properly and learn to anticipate the direction and know when to enter the trade and when to wait. However, please be aware that the members who are most successful in using our information have learned to enter the market as we do. Because if you're always waiting for the alert to enter the trade, you will be entering the trade after we have already entered the trade ourselves. And often you'll be entering it at a higher price. Not always, but often. Overall, if you always waited to enter or exit a trade until you saw that we did it on the website, you can expect to have about a 5 to 10% slippage from what we experience. So the best way to use our information is to learn how to read the charts, know when to enter and when to exit on your own, and then use the information posted on the Daily Outlook as confirmation of the trade. Now, back to our example day on June 28th. Now, for training purposes, we're going to be walking through the day, advancing the charts 1 minute at a time as we walk through the day. Now, remember our setup here. Our Daily Outlook has already been posted. We've already drawn our lines on the SPX and SPY chart for our daily target levels and the first, second, and third target levels. We've already put our option symbol in Excel and in Active Trader, and now we are waiting, looking for an entry point as we begin our trading day here at 9:30. Okay, now it's 9:31 as the day progresses. Not a lot of movement in the first minute of the day, not unusual. That's often the way the market moves first thing. We see a little bit of pullback in 9:30 and then a little bit of consolidation in the 9:31 bar. And so we would continue to be waiting to see how this develops here. As we come to the 9:32 bar, we can see that the market started to move in our direction. The market moved rather nicely as we broke through the daily target level here on the SPX and also the SPY, and we also hit a new high, which is a good indication for us in entering our call position. Remember, we're looking for an entry point with our call position on this day, and one of the classic setups for an early entry is as it's moving strong and takes out above the daily level and as well takes out a new high, and that's what we see here. So as we go to the 9:33 bar, what we would be looking for is for the market to continue higher and to take out the high of this 9:32 bar. Now, if that were to happen, that's when we would be looking to enter our trade early before 9:35, and we would enter our SPX option position at that point. So let's go ahead and move forward to 9:33 and see what happens with the market. Okay, as the market moved here, as we come to the end of the 9:33 bar, you'll see that it did continue higher and took out the high of the 9:32 bar, and that's exactly where we would have looked to enter our trade. And on this day, that's exactly what we did. We entered our option trade as it took out that high, and we got a fill price of 1060. And so as our fill price was entered, we do two things. First, we enter it up here in our Excel spreadsheet, so it can be automatically calculating for us our high percentage and our current loss percentage. And then I always like to draw a line in the chart itself so that it's easy to see where my option position is on the chart and where it is in regards to the entry price. Now remember, the postings on the Daily Outlook are normally going to come anywhere from 20 seconds to a minute after we actually entered the trade. And so don't be surprised if you go ahead and enter a trade that it takes it a little bit before it's updated in the Daily Outlook that we have also entered the trade at SPX Option Trader. But once we have entered the trade, we will post that update as we just did here. You'll notice the update is we purchased the option. Notice here we purchased the option at a price of 1060 and we purchased the SPY at a price of 84. Now again, for today's purposes, we're only focusing on the SPX, and that happens to be the same price that we're tracking here in our training video. Now, oftentimes your actual fill price will be slightly different than what we post on the website. That's not unusual. The markets move very fast. It's very difficult for two traders to get the exact same price on any option, and that's okay. You just enter your entry price at the top here, and you can go ahead and follow with the trailing stops just as we are doing ourselves. Okay, as we come to the 9:34 bar, you can see the market's continuing to go in our direction, and that's a good thing. we have already entered our trade, and now basically the fun part of the trading day begins. We simply sit back and wait for the trade to run in our direction so that we can hopefully exit at a nice profit. Now, as the trade begins, we have an initial profit target of 85 cents, an initial stop loss of 60%. We had those posted in our daily outlook, and we entered those into our Excel sheet here. Those are guidelines. We normally start using a trailing stop way before either of those values are hit. But if the market reversed on us extremely quickly and just started to drop here, we would make sure that the maximum loss we would take would be the 60%, which right here has been automatically calculated for us at 424. The initial profit target of 85%, our 1961, is that level that we are hoping to achieve, and if it hits that level, we are going to be watching it extremely closely, looking to make more of its running, but also looking to exit our position quickly if it starts to reverse on us. And so at 9:34, the market is going our way, and we simply watch and wait at this point. Okay, as we come to the 9:35 bar, we notice the market is continuing to run, which is exactly what we wanted. So far, as we come to the end of the 9:35 bar, you can see that we've hit a high of 25% on our option position, and that's an incredibly good position to be in. We want it to continue to run. That's the goal of trading. And at this point, we are simply watching it. Now, we're going to be wanting to watch the daily levels. As it moves high above the daily levels, we're going to watch for reversals. If it was to reverse and come back down through those levels at this point, that would be very concerning. Throughout the day, alerts will be updated on the daily outlook for what we are watching ourselves as a service, and so that can help you know what to watch as well. And so here, as we come to 9:35, you'll notice a new alert was posted down here. It says right here, consider watching the 54.90 level in SPX and 547 level in SPY as possible stop levels. You'll notice those correspond to the daily levels. So here, as it's moved in our direction, now that becomes our new stop level. What that means is if the market were just to come down to those levels, we would be looking to exit the trade. Now, we might not exit immediately. We might give it just a moment to see if it's going to bounce off those levels, but we're going to start watching those levels as a new possible stop level if the market were to reverse on us. Okay, the end of the 9:36 bar, the market is continuing to run. As it continues to run, we continue to wait and watch and look for exit conditions to be hit. It's continuing new highs. We've hit over 30% on our option position. You can see here it's moving nicely, and we just continue to wait. Patience is a key in day trading. I know that sounds incorrect. Usually day traders are not known for their patience, but it does take patience to not exit a trade too quickly when it's running in your way. And so that's what we want to do on a day like this, is let it run and try to maximize the profit the best we can. All right, here at the 9:37 bar now, and the market continues to run in our direction. We've hit 39% in our option, which is a nice profit percentage. We're way above the daily target levels, and so we simply continue to let it run. Now, again, remember, we will be posting updates on the daily outlook as it runs to help you know what we're looking at ourselves. And once it's gone that 40%, generally we're going to be starting to move our stop levels up, meaning we're going to use a trailing stop. And you'll notice we just posted an update. It says consider moving stop to about break even. That is, we don't want to let this profitable trade turn against us. So if it was to come back down towards the entry price of 1060, we would be looking to exit the trade. And so now we are guaranteeing ourselves that we're going to make a profit on the day, and we just simply sit back and let it run. And that's what we're going to do here. Right, with the 9:38 bar now, there was just a slight consolidation in the SPX, and that's fine. That often happens. We simply continue to hold our position and watch it closely. We're still watching either the daily target levels or break even on our options at this point in the morning. As we come to the 9:39 bar, we see basically it's continuing to do the same. It's continuing to consolidate, and we're continuing to watch our position closely, looking at break even as a possible stop level if it was to reverse, as it's hit already 39. There's been a new update here on our daily outlook. It says consider using about a 30% trailing stop. Now, at this point, that means that if it's 30% off the high, we would look to exit our trade. And our Excel spreadsheet comes in handy here because we can just come up to the Excel spreadsheet, we can enter right here trailing stop percentage, and we enter a negative 30. That tells us the stop price would be at 11.57. That means if the options were to come down below 11.57 at this point, we would look to be exiting our trade. Now again, that is a guideline. We might exit just a little before that, we might exit just a little after that, but that's our guideline, would be 11.57. Now you could draw a line on your chart and continue to monitor it that way, or you could just use the Excel spreadsheet to monitor it, whichever you find easiest. Oftentimes drawing a line on a chart can be very helpful if you're willing to do that quickly. So if we were to do that, we would draw a line here and we would say 11.57, and we're going to make it a green line so that's easy to identify right there, meaning that if the option price were to come down there, that would be 30% off the high. We would be looking to exit the trade. Here we are at the end of our 940 bar now. The market continue to run higher. We'll notice that there's a new high level on our option, which means that our trailing stop price value changed as well. With a 30% trailing stop with a new high, now our stop price is 11.72 instead of 11.57. So if you're going to be writing a line on the chart, you're going to have to constantly change that price because it's no longer 11.57. Now it would be 11.72. So that can be helpful. It might be annoying. It might be too much for you. It's just a suggestion. You can ignore drawing a line on your chart if you prefer and just simply focus on the Excel spreadsheet for following up at what level we're looking to exit the trade. All right, as we come to the 941 bar, there is a slight pullback in this bar, but again, nothing to be concerned about. Our stop level has not been touched, and so we just continue to watch and wait. 942, market starts to go back up, and again, not much movement in our option, so we continue to simply watch the markets and wait. 943, and more of the same. And that can often happen in day trading, where you are simply waiting and watching and seeing how the market develops before we choose an exit price. 944, the market's now moving higher again, and that is a good thing given that we have a call position, and that's what we are watching for and looking for that rally. As we come to our 945 bar, we're seeing another nice rally, and that's exactly what we're hoping for, is a continued rally. And so we continue to monitor our option position and continue to adjust our trailing stop to try to maximize the run as it continues to go in the forecast direction. You'll notice we just heard that sound, and there's been a trade update. Now Outlook is saying consider using about a 25% trailing stop. That is, we're tightening our stop as it's running. So we just come up here to our Excel spreadsheet, we change that trailing stop to a 25, and you'll notice that changes our stop price to 12.65 at this point. So again, if you're using a line, you would just change that to 12.65, and you have a visual representation of if the market were to pull down to that price, we would be looking to exit our trade. 946, the market's pulling back a little bit, but still has not hit our trailing stop, and so we continue to hold our position. Now again, as an individual trader, you can choose to exit a trade whenever you feel comfortable. If you want to lock in, right now it's at 30% profit, and you don't care if you make any more in the day and you want to take it, you can always exit early. But for us, we are waiting until our level is hit, and so we would continue to be holding our position here. The 947 bar here, we saw a little bit of a pullback. It's coming down closely to our stop level of 12.65, but it has not hit it yet, and so we would not be exiting our trade yet. We would be watching it closely, getting ready to exit if it was to break that level, but it hasn't yet. And so here at the close of the 947 bar, we would be continuing to watch our position and watch it extremely closely as it's getting close to a possible stop level. As we come to the 948 bar, the market started to reverse and started to bounce on us, which is a good thing. So we continue to watch it very closely here. Now, continuing to watch a position means give it your full attention. There was just an update. We just simply said, still holding positions. Now, we will often update that type of information so that you know we're still holding the position. It came down close to that level of our trailing stop. It didn't hit it. It started to bounce. And so we're just letting our members know that we're still holding the position ourselves. And so we continue to hold and watch and see what develops here. Okay, as we come to the 949 bar here, the market is continuing to bounce back and forth. Our option position is holding at about a 30-40% profit at this point, and that's a good thing. I'm going to go ahead and jump our charts ahead just a few minutes to speed this process up for the training video, and we'll jump ahead to about 9:55 or so here. Okay, we've jumped ahead just a few minutes here. We're now at the end of the 9:55 bar. The market's continuing to run in our forecast direction, which is a good thing. You see right here, 9:54, the SPY hit the first target level and then started to pull back. Pullbacks or reversals off at key target levels are always a bit concerning, so we're watching the market action very closely whenever it hits a key target level. So far, we've hit a high of 50% on our option position. The market is moving in our direction, which is a very good thing. We're continuing to watch and wait and expect to make a nice profit as it continues higher. But anytime it comes off of a target level, we are watching it closely. A quick drop off of that level would be concerning and would be a reason for us to consider exiting our position early. There was just an update on our daily outlook. We said consider using about a 20% trailing stop. And so we want to adjust our trailing stop here. So we come up to our Excel spreadsheet. We put -20. That's going to give us a stop price of $13.75. So once again, since we are using a line, we're going to change that price to give us an easy representation there of what we're looking for if the price were to drop on us. Okay, we're going to jump ahead a little bit further, jump ahead another 5 minutes and see what develops on this day. Okay, as we come to the 10 a.m. bar, we notice that there was some nice movement in the market. Notice we saw a nice jump here in the SPX and the SPY and correspondingly our call option position. We broke above the first target level, which is always a good indicator. We're always watching how the market acts at those key levels that have been forecasted in our daily outlook, which is why we draw the lines here. Oftentimes when it breaks it, it might pull back slightly and then continue in that direction. So we are watching it very closely. Likewise, a fast reversal off of a target level will cause us often to just go ahead and exit our option position. Now this is at the close of the 10 a.m. bar, and you'll notice what happened here in our options. We hit a high over 19 of over 81%. You'll notice up here in our Excel spreadsheet, and then it started to pull back. Now, right now we're using a trailing stop of about 20%, which would be right about where the option is closing here at 10 a.m. at 17. However, we're also just above that first target level of 55.04. So we're going to give it a little extra room here. We're not going to immediately exit it right at that 20%. If it was to break 55.04, then we would certainly want to exit our trade. But we're going to give it just a little extra room here because oftentimes when the market quickly breaks through a level of resistance or support, it bounces a little bit before it continues in the right direction. And so let's see what happens here in the 10:01 bar. We are at the 10:01 bar, and you'll notice the market has continued higher. And although the option pulled back just a little bit under 17, we gave it some room, and now it's continuing to head higher. And so we are watching that 55.04 level, as well as watching about a 20% trailing stop here as the market moves at 10:02. Okay, and as we come in now to the 10:02 bar, the market has rallied very nicely and very quickly. And you can see that we have hit the second target level here already on the SPY, as well as our option position has gone incredibly well. We have hit over 118% to the good. And so we need to now adjust our line again because our trailing stop at 20 now puts us at 21.03. And so we would enter that value here. Now, oftentimes, I like to round down. Instead of putting 21.03, I might just put 21 on the chart there as a way to identify the level I'm watching. And so we will continue to watch this to see what develops. We have an update. Now it says consider watching about a 10% trailing stop. Oftentimes, once we've hit over that 100%, we're going to tighten up our trailing stops, and that's what we've done. So we enter that in our Excel spreadsheet up here. That tells us that our new stop price is 22.09. And so we're going to want to change that. And again, I'm going to put 22.10 and just watch it at that level at the 22.10, realizing then I'll give it a little extra because it's actually 22.09. But that will give me a nice way to look at it at the chart as it continues to run in our direction. All right, the market's continuing to rally and it's moving very quickly on us now. Notice that we've hit a new high on the SPX and the SPY, as well as a new high in our option position. We're now at 141% at the high, and we're going to be continuing to follow it up with a 10% trailing stop. It will be identified for us up here, giving it room to run, but also ensuring that we make a very nice profit as it runs. Now, we're going to jump ahead a little bit here to show what happens on this day. Okay, we've jumped ahead now to 10:12, and you notice the market has continued to run nicely, and we have just continued to follow it up using about a 10% trailing stop. And as we come to the end of the 10:12 bar, we've hit 200%, meaning if it comes back to about 190, we would look to exit the trade. We're following it very nicely and hoping to continue to let it run, but also to protect ourselves if it starts to reverse. Okay, now we finally had a pullback here in the 1013 bar, and you can see it started to pull back on the SPX and the SPY. You'll notice that our option pulled back that 10%, and so we would have exited our trade here as it broke that 30.65 level, which was about a 10% trailing stop. That's exactly where we would have looked to exit our trade. Now, you might get exactly that price. You might get a little bit worse, a little bit better, depending upon how the market is moving, but that would have been the level at which we would have looked to exit our trade, locking in that 190-ish or so profit target as it pulled back. When it's run that far, we're going to go ahead and call it a good day, and 190% is a great day. Notice right here, we've just updated our outlook. We got out at 29.65 for a profit of 180. So we got out as it started to pull back. We got a little bit under that 10% because the market was pulling back quickly, but we locked it in at 180. And so you can see how it is that we wrote a trade here, and in less than 45 minutes, we made a very nice 180, 190% profit on our trade. And that's the way you can use the daily outlook to follow a trade profitably and maximize the runs. Now, clearly I picked a day here for training purposes where we had a very nice profitable day. Not every day is like that. There are days where we get out very quickly and don't ride it as long, or we get out at a small profit only to see it run more profitable later in the day. There are times where we take a hit because it goes against us. But the process is the same regardless of whether it's a nice profitable day like this or whether it goes against you. You don't get emotional, you don't get stressed out, you simply take the trade and then exit according to the exit guidelines. This is the process that we do every day. I've been doing it since 2016. And by staying consistent, this is how we are successful in our trading of the markets. Now, I can never guarantee what your experience will be. But I do know that this approach and trading in this manner has proven itself to be reliable and successful over many years. Hopefully you have found this video helpful to you in understanding how we trade the daily outlook at SPX Option Trader and how better to use the information in your own trades. And we have other trading strategies that we use every day, and be sure and look at our website and our other videos to see how you might use those strategies in your trading. Until next time, make it a profitable day.